Hello traders, welcome back to the channel. Today we're going to be talking about a simple trend following concept that I really like, especially on GBP pairs. And specifically today we'll be taking a look at GBP JPY. And this is again a trend following kind of continuation structure based strategy where we're looking to catch the next big move in an overall trend, either to the upside or the downside. It doesn't really matter as long as we have a lot of momentum on the chart. This is a strategy that's going to look to potentially catch the next move to the high or low side. Let's go ahead and get into the video right now. So if you've been trading currencies for a while, then you've probably heard of GBP JPY. This is the pound yen, and it is one of the most volatile currency pairs at the time of making this video. The pound yen moves quite a bit, and it makes sense. It's the combination of the British pound, which is a highly risky asset at the time being, and the Japanese yen, which can also see some very big movements in the market. So combining these two naturally gives us a very volatile chart. But with volatility, there comes something very interesting. With high volatility, a lot of times we see very strong trending markets, and we see markets that can continue to trend very high for a very long time, whether it's up or whether it's down. Another similar pair is gold, right? Gold has been known in the past to trend very extensively, both to the upside and to the downside. So today I've got a strategy that's focused on specifically trading the pound yen and using a very simple concept. This concept can be used with other pairs, but I've tested it quite a bit with the pound yen and it looks really good. So again, the concept of the day is a trend continuation structure-based strategy that looks to take advantage of breakouts and continuations on a higher time frame chart. So we're looking here at the 240 minute or the 4-hour chart here. And the idea here is that we have a trend that we're looking to trade. The first thing to take into consideration when talking about this strategy is we need to have a trending market, right? We need a trend in order for this concept to make sense. Why is that? Well, we need energy, we need momentum, we need something to drive this entry of ours into profit, right? Which includes having some sort of trend that is more likely to continue than to disintegrate or to go back the other way, right? If we're looking to trade with the dominant energy of the market, we're looking to just catch a piece of that overall trend and move on. Right? That's really what we're looking to do here on this particular strategy. So we need this trending concept. So how do we identify a trend? Well, you can see on the chart here, just for my personal preference, I have the 50 period and the 20 period MA. So very simply, I'm looking to see that the 20 period is above the 50, right? So we'll put 20 here and we'll put 50 here, right? So very simply, in order for this to be considered a trending market, these two have to be lined up. That's kind of my first criteria. So if we add that to having a trend, we're going to have the 50 and the 20 in agreement, right? So we have the 50, we have the 20, and both of them are in favor of the overall market trend, right? So that's kind of contributing to point number one. So 1 and 2 are good. We see a clear trend. We see the 50 and the 20 lined up. Now what next? This is where we're going to look for significant structure breaks, okay? So when we're looking to trade GBP JPY, sometimes when you're breakout trading, as I've mentioned in my breakout videos in the past, sometimes it's nice to wait for a retest before a continuation, right? But on GBP JPY, oftentimes we see volatility continue so much that we see that price just continue after a major break. So let's look at some examples here. If we take a look here on this particular chart, notice how the market was moving in favor. So right around here, we started to see the market moving to the uptrend, favoring a continuation upwards, right? Well, then you see price kind of chopped around a little bit, but overall started to trend very nicely. And specifically right around this area, we saw a very nice impulsive move to the upside. So this is where our trend following concept kind of comes into play. We're looking to see the continuation. So we start to see this retracement or counter trend, right? And as a trend trader trading some of the breakouts, we want to see this counter trend fail. Really, we're looking to see that the sellers here are not able to actually continue rallying to the downside. And so what we're going to do is we're going to look to see that if they fail, we're going to look to join the move and kind of fight against them, right? So let's draw a simple trend line along the way, right? So we have this market moving up. We have this kind of wave to the upside. And as price starts to retrace here, we're respecting this counter trend, right? Counter trend is a real thing. It's where, the market is pulling back, and we're seeing sellers in this case hold the market to the downside temporarily. But what we're going to be looking for is a break above that significant level of resistance that sellers are holding. If we see sellers fail here, we have a pretty good chance, not a guarantee, but a pretty good chance that we could see some continuation to the upside as buyers take back control of this market and continue their dominance on this trend. So how could we have traded this concept on pound yen? And again, this is something that we see again and again. So this example, of course, is a good example. We're showing the good example so that you guys can learn from it and get the idea here. But overall, we see this kind of concept play out a lot of the times in many markets, but GBP, JPY especially, right? So when we have this particular market breaking to the upside, one way that you could trade it is if you're an aggressive breakout trader, you could look for a swing by buying the break here, right? Of course, you want to make your own decisions and you want to test this concept for yourself, but we're looking here at the 4-hour chart, and price looks like it could continue once it's broken out of this counter trend move, right? So as sellers were holding that level, when they broke through that level, we did see, in fact, a continuation. But how could we actually have traded this idea? Well, on the 4-hour chart, you can see we have some structure. If we look left, right, we have this level of previous support, right, where buyers held this level. So if price breaks underneath that level, then maybe we look to stop out. Right, so you could put a stop, or we'll put SL here, right? If price decides to roll over and get us out, then no big deal. We stop out of the trade and we look to move on. But here's where the real power in this concept can come from. If you have the patience and you're willing to take a higher reward to risk, you could look for a 3-to-1 on this particular trade, right? Which means that your risk is just 1 time and your 1 times and your reward is 3 times that amount. So if we're risking, let's say $100, right? If price goes down $100 here, we'll manage our position size accordingly so that if we lose this trade, it comes down and we get stopped out for a $100 loss. But if price goes in our favor, right, we could look to take some sort of 3-to-1 reward to risk and take $300 in profit. Right? Of course, you want to do this according to your account size, $300 and risking $100. You want to be careful that you're not risking too much on each particular trade. But if your account could sustain it, right, $100 risk and $300 reward, this sort of concept could work out if you get good at picking those breaks. We're really looking to catch the next wave of this market impulse, right? Which is exactly what we did see play out here. You can see price, we would have bought right into this trade right here. The trade kind of traded in our favor and overall closed out for a nice profit there at our 3 times our risk, right? So we had 3 times the risk and 1 time the risk and 3 times the reward, right? So overall, our reward would have been 3 times or $300 on this particular trade. Now, there are some drawbacks to this, okay? You have to think about this logically. If you put your take profit a long distance away from your entry and you put your stop close to your entry, naturally you're going to have series of losers. You're going to have trades that just don't work out, right? If price came up and broke out of this level, of course, sometimes we're going to see price just not work out and go back into a range. But what we're looking to do here is accept that lower win percentage, right? Let's actually write this out. So we have a low win percentage, but we have a high reward to risk, right? Meaning that our winners are going to be much bigger than our losers. In this case, a $300 win relative to a $100 loss, that's a pretty decently sized winner. And so taking a series of trades, the idea here is that over many trades, we're going to have more winners than losers, or more win amount than losers, but we'll have more losing trades. Hopefully that makes sense. Again, a low winning percentage, but a high reward to risk gives us, hopefully in this case, if you can get good technical entries, some sort of edge over the market so that long term, you're taking more money out than you are putting in and losing, right? It's natural. It's okay. We're going to take losers. That's part of any trading strategy. But understanding that we can accept a low winning percentage in exchange for a high potential reward to risk is key in this particular strategy, right? The idea also to consider, however, is that, again, you're going to have to be able to maintain a psychology that can handle taking a high percentage of losers. So the concept here is that over time, our edge is hopefully going to play out, right? So if we get good at picking this concept, we find those breaks very accurately, even something like as low as a 30% win rate can actually play out in our favor. So if we have 30% of our trades are winners, right? And we have 70% are losers, the idea here is that we can actually still come out profitable, right? So how is that the case? Well, if each time we win, we make $3, right? And each time we lose $1, right? Because our reward to risk, again, is 3 to 1. So we're risking 1 to make 3, right? Over time, this can still work out profitably, because if you took 100 trades, then 30 of them are going to be winners at $3 a piece, gives you a $90 profit from those winners, right? And then if we take 70 of our trades then out of the 100 would be losses, well, that gives us minus $70. Well, look at that. Even by only winning 30% of the time, less than half of our trades, we would still come out with a profit of $20. So that's not bad at all. And of course, if you scale this up and you have a bigger account, then you could, potentially make more. If you get good at picking those entries, and of course you take your own trades and manage your risk accordingly, this could work out as a profitable system. So GBP JPY is the one that I've tested here. Of course, you want to take the time to test this concept and, spend some time in your back testing to see what works for you. But again, this concept is something that we see again and again in markets. Of course, it's not always going to win, and no strategy is perfect, but it's something that we see quite often. Here's another example that I was looking at before I turned on the camera. Here you can see price starts to move in the direction. We get a dominant market energy to the upside, right? Price starts to consolidate sideways. And when price breaks out of that range, there's another shoot to the upside. Again, this is showing that buyers are still in strength and they've broken through that seller range. And we see that continuation or burst to the upside. And that's something that we're looking to capture with this particular strategy. Hopefully this made sense to you guys. Thanks very much for watching. Make sure you subscribe down below and give this video a thumbs up if it was helpful to you. We'll see you next time. If you're looking to improve as a Forex trader, I've got an entire channel here full of free stuff to help you out. You can check out videos here. And if you're interested in my VIP service, where you can follow along with my trades as well as join our membership chat room, you can check out the link down below in the description. Check it out. We'll see you there.